Room Live. It is the 25th of January 2016. This is our first webinar for the year, and I'm very excited to be coming back on air today with John Eastreich, who has spent many years analyzing the markets as a Hurst analyst and has been publishing his analysis for many years anonymously, or not anonymously, but under the name of Silent One. He's earned himself a great reputation as a Hurst analyst. He has some fantastic insight into the markets. On a personal note, when I started developing Sentient Trader, which in those days was called the Hurst Trader, John was one of the first people that started working with me on the development of the Hurst, and provided some fantastic guidance in the development of the software. And in those days, I would read his analysis. And when John says he's expecting something to happen in the markets, I've learned over the years to sit up and pay attention. So I'm delighted to have John with us on air today. Are you there, John? Can you say hello?
Yeah. Yep. Hello. Good morning, everyone.
Okay. Fantastic. So before we get to speaking about the markets, I need to legally make sure that you have taken a look at these disclaimers. They are very important. So please bear in mind these disclaimers. Although we are speaking about the markets, we are not making any representation financially. We're not telling you what you should buy or sell, because legally we are not allowed to do that. So please make sure that you have read and understood these disclaimers. What we're going to speak about today, that's the wrong thing, is we're going to start by taking a look at what happened in the US markets. This is the S&P 500. And perhaps a very quick look at the Dow Jones Industrials. And then we're going to move from looking at the US markets. We're going to take a look at the Canadian market, the TSX. And there's a really good reason that we're doing that, because some really interesting things are happening in the markets at the moment, and the TSX is going to give us some markets. And the analysis I'm going to be presenting in the TSX is John's analysis, and so he's going to be discussing that with us. And then we're going to move the discussion into crude oil, because crude oil has a really strong influence on markets globally, of course, and particularly on TSX, because the Canadian TSX is very commodities heavy. The Canadian market is very influenced by commodities and crude oil particularly, and so we're going to have a look at what crude oil means, what the analysis of crude oil means for the markets generally. I see David is saying the audio is cutting in and out. I'm really sorry to hear that. I had a discussion with John earlier about it, actually. The Click webinar system does seem to take some strain when we have a lot of people connecting, and we have about 100 people online, and it does seem to take some strain. And I've asked them to let me know what we can do to improve things. So I'm hoping we're going to be able to improve audio over the next few weeks. But in the meantime, I do apologize if the audio is at all problematic. Let's just get the conversation started by taking a look at the S&P 500. And this is an analysis. I'm starting with this chart simply because there's some continuity. When I started these webinars, this particular season of webinars, if you like, last year in September, this is one of the first charts that I looked at and I spoke about. And it shows us the S&P 500 going back only to 2008. So it, of course, shows us the big move from March 2009. And I've spoken at great length about this analysis, so I'm not going to dwell on it too much. Let me just show these semicircles because they're quite at this scale. The important thing about this analysis, and let's see if I can get a pen going and show you a few details here. The important thing about this analysis is that, well, first of all, the longer cycle is the 4.5-year cycle, a 54-month cycle, and according to this analysis, that 54-month cycle trough occurred over there in 2012, and then we've seen, of course, another iteration of that cycle, and so we're seeing turning down into the next, using Hurst's standard nominal model, what would be a 9-year cycle, and of course, we've in recent webinars just the fact that that might be a 7-year cycle, and John can speak a little more about that in a moment. Certainly a fairly long-term cycle, and we've been discussing for some time in our previous webinars. I'm not going to waste time going through all of it again now, but we have certainly been expecting a peak. I've certainly been expecting a peak, and started writing about the fact that I was expecting a 9-year cycle peak to occur, and now with the benefit of some hindsight, certainly the market have left behind them a peak of some magnitude, and so the markets are now heading down, and they've been coming down very hard this year. It wasn't a surprise for cycle analysts because we've been expecting markets to come down into that peak, and it was a theme that kept coming up in webinars last year, the fact that we're expecting the markets to come down into an important trough sometime this year. And let me just zoom in and show you here. I'll just hide the semicircles. I find them a bit distracting. And so here is the situation, assuming that the last 18-month cycle trough was in October of last year. We saw a 40-week cycle, which culminated in the big move in August, and then since then we have seen another cycle with a very strong move down here in January, in the beginning of this year, and that is probably coming down into a 20-week cycle trough, and lying ahead of us sometime a little later this year is the next 18-month cycle trough. That's according to this analysis. There are various different possibilities, but the important point, I think, in terms of looking at the S&P 500, markets are coming down, and we've been expecting them to come down. There's a lot of discussion in the markets as to whether this is just the beginning of another really big crash. Are we going to see the markets plummeting as they did 2008? Are we going to see, is this the beginning of the move down, or are we going to see an important trough forming fairly soon, perhaps sometime this year, with the markets then bouncing out of it? And that's really what we're going to be discussing today with John. So this is the situation in the S&P 500. You can see from this analysis that we are expecting a 20-week cycle trough to occur round about now. And there are variations on this, which expect perhaps a 40-week cycle trough to occur round about now. So we're certainly expecting a bit of bounce in the S&P 500, with then probably a further move downwards into a more prominent trough. So that's the situation in the S&P 500. Generally, most Hurst cycle analysts, I think, will agree that we're looking at a 40-week cycle trough occurring now. So we're going to get a good bounce for several weeks out of that 20-week or 40-week cycle trough, with a move down into a lower trough. Is this the beginning of a crash, or is that next lower trough going to be a really big turning point and the markets are going to turn back up again? So that's really the question that's on the table. And so John has some really interesting analyses to share with us. So let's start taking a look at that. Why do we look at a different market? Why have I started looking at the S&P 500 and now suddenly I'm jumping to Canada? What's the purpose of that? Hurst defined a principle called the principle of commonality, which tells us that markets move with a great deal in common around the world. So if you are watching one market, another market will be moving slightly differently, but with a great deal in common. And what tends to happen as a Hurst cycle analyst is that analysis of one market can inform your analysis of another market. It's a really important tool that we have in our tool set. And so when considering the US markets, the S&P 500 or the Dow Jones Industrials, particularly looking at another market can often shed some light on this market. So look at the TSX. So John, I'm going to pull you into the discussion here. The TSX is the big Canadian index, isn't that right?
Right. So the idea with this morning's analysis is to look at other markets to help us understand perhaps what the S&P is doing and what the U.S. markets are doing, and try and get a read on the phasing, because it isn't all that clear right here as we start 2016. So
right.
if you wanted to just bring up the TSX as a first chart in that workspace.
Yep. Yep. Okay, let me go to this. FLDs and pattern projection boxes. There we go. This is the one. Yep. Okay.
Right. So if we just stand back, yes. So if we look at the TSX in the long term, it's making, I think, these similar 7 and 14-year type of cycles, a little bit shorter than the nominal Hurst cycle periods that we typically discuss, and
Right.
so this analysis is showing an interesting thing that we'll sort of work towards in this discussion. But the phasing of the TSX is a little different in the long term, but there is still the same 7-year cycle that is working in say both the markets, the S&P and the TSX. And so
Right.
the S&P and the TSX are making a 7-year cycle low, I think this year probably. I think that in the bigger picture, the TSX may also be making a larger degree cycle low, and that's why you're seeing a bigger decline and a more advanced decline in that market versus, say, the U.S. markets. So this is one thing to consider. And I think that the TSX has been leading, no doubt, a lot of markets, and that's due to commodities and the bear market in commodities, and particularly the poor energy markets, the very weak energy markets. So we'll bring all that into the discussion this morning. So just to have a quick comment on the shorter term phasing of the TSX, we can see that the larger cycle lows are forming. This is the 14-year, the 7-year, and the say the 14-month cycle that I'm following. It's all due this year for that market. So if we look at the short term,
let me zoom in. There we go. Yep. Okay, so there they all are coming in now. So we're looking at a long cycle forming a trough at the moment, a 14-year cycle according to this model.
Correct.
Shall I zoom in
Correct.
and look at the last 18
Yes.
months here and have a look at that coming down? There we go.
So, and the point that we're going to make today is that by the principle of commonality, as the TSX approaches and makes its important trough, it'll be very meaningful for the US and for other world markets. So this is, again, why it merits a close look at a market like the TSX. So the phasing that I've been working with is to use the October 2014 low as an 18-month low, or nominal 18-month low, call it 14 months. And now we should have been seeing a low form. We should have been seeing a low form right in this time frame. But you can see that the cycle is fairly bearish, and so now the question is, how do you treat the August last August low, the August 2015 low. Is that a 40-week low? Well,
Yes.
I haven't tried to tell Sentient that it should do that, but it hasn't decided yet. And the way things are progressing, I have this feeling that it will become a 40-week low and a bearish expanded cycle period 40-week low. And
Right.
now the question is what are we seeing? What are we seeing off of that? And again, I haven't tried to pin anything, but if you look at the December low, was that a 20-week cycle low? And now are we falling into a final 20-week cycle low? That's the question.
Right.
And I really don't know. I can't say for certain. Um, Oops,
Right.
sorry about that. I can't say for certain. But now, if we look at the other markets, maybe we're going to get some clues. The other
Okay.
thing is
Before we move on to,
maybe
sorry.
I was going to say maybe we should look at the FLDs because the FLDs
Yes.
here are going to tell us a little bit about how advanced this correction is. So
Okay.
we've got the 7-year and the 14 FLD to show.
Yeah. 714 year. Let me just deselect the others. There we go. There we go.
So
So here's the 7-year FLD,
exactly. And
and
the
and
so
price is
the
right at that FLD now.
correct. And the 42-month FLD gave a target not much lower than this. I think if the last time I looked at it, if
There we go.
you work
So
out the
there's
target
there's the
from that,
42-month target. Okay. And for those of you who
right?
are new to the concept of an FLD generating a target, you take the previous peak, which would be pretty much this level here. You go down to where price actually crosses the FLD, and you extend an equal distance downwards, and you therefore come up with the target. This sort of way in which the FLD slices the move in half is something that you will get very used to seeing as a Hurst analyst, and so that's the target for the 42-month FLD. So price is arriving at that target.
Yeah, it actually works out to around 11,000 plus or minus. And so we've
11,000.
we've
Okay.
yeah we've come close. We've come close last week to that target, and I expect it to be achieved. I would be very surprised for the larger cycles that are involved if that target isn't achieved or exceeded actually. So
Right. Right.
this is why I would question whether or not the lows of last week would be meaningful lows. I'm not sure that we've seen that yet. And then just looking at the phasing and trying to work out what the end game here is a little difficult to say, to be honest. So we've made a bounce, and the TSX has bounced pretty hard actually from last Wednesday or Thursday. But I think that's just
Right.
a bear kind of rally bounce, which may or may not continue in the next days. But I would expect the 11,000 target certainly to be achieved. It could be next week, this week or next week. But there is going to be, I think, a lot of volatility as we find the low for the TSX, and again, that'll I think help you see what the S&P is up to and how it's going to form its low. So rather than try
Right.
to guess at the phasing at this point, why don't we move on to the other two instruments that we've looked at, David? That's the
Yes.
EWC, EWG.
Right. EWC, EWG. Before we do that, I'd just like to make a quick comment about why the phasing is so difficult as you come into these really big troughs. What what happens as you come into a trough, and we saw, and you see it time and time again. We saw it at the beginning of last year with the euro. As the euro came down to a really big, important trough, you get lots of these little sort of bounces like that, but it becomes really quite difficult to determine what magnitude each one of those bounces is, which is why as a market sort of rocketing down into a really important long-term cycle trough, your analysis process gets more complicated, because it gets much more difficult to identify the magnitudes of those troughs. I noticed that Sid has just replied to that, speaking about this trough here. Is it a 40-week cycle trough or not? What we'll do is we'll first of all speak through the analyses that we have here before taking a look at some of that detail, because as a market comes down into a really important trough, it's often better just to take a bit of a step back, not get too focused on the details. As soon as you start trying to identify all of these little wobbles in the way down, it can be a little bit misleading. But let me move on to the EWC. Now, the EWC is an ETF, I believe I'm correct in saying, which is based on the TSX. It's based on the Canadian market, but it is US dollar based as opposed to Canadian dollar. Is that correct? Let me put up those semicircles. There we go. John, do you want to tell us about this is EWC. John, are you there?
Sorry, what we're looking at here is an ETF. This is for the Canadian market, and so it's priced in US dollars. And I started following this a couple of years ago because I felt that it was difficult to try and understand the cycles in the S&P and for that matter other markets. So I found it easier to actually work with this instrument, and it sort of helped me see that the TSX was going to have some difficulty already going back a couple of years. And so now what I'm hoping we can do is use this to get a sense and understand where the Canadian dollar is going to make an important low and reverse, and where the TSX is going to find a low and reverse, along with other markets. So if you wanted to focus in on the shorter term phasing.
Right. So we also have an 18-month low here in October of 2004.
Right, and I think you have to work with that low as the, using principle of commonality in other markets. I think you stick with that. So then if you look at the August low, then you start to get a bit more comfortable with that being a 40-week low. Again, Sentient hasn't identified it, but I expect it pretty much based on this analysis. Again, there are no guarantees. The problem is that this cycle off the October 2014 low is getting quite extended, and so which is normal. It's just normal. This is what you would expect in a bearish cycle, and as we come into the larger cycle lows. So what it suggests, if we just look at it, Sentient's sort of seeing a low forming here in the coming weeks. It could take until the spring. In fact, it could be very volatile. But somewhere in here, we are going to form, some kind of important low, based on this analysis. And the other thing to note is that the 7-year FLD, if you step back, perhaps on this chart, you see that the 7-year FLD has been broken to the downside. So it's telling you that the 7-year cycle is now forming and forming a low. And so that's it's not a particularly bullish shape in the long term. you know, it is if you see what I mean by the lower highs. But anyway, we don't really want to get into that just yet. The fact is that an important low should be forming sometime this year for the market, for the Canadian dollar, and same for other markets. So now, if you wanted to look at EWG,
Right.
sort of, this is now the German market. This is the DAX priced in U.S. dollars. And again, the DAX and the Canadian market do trade together quite a bit. They're I don't know why, but they are very similar markets. And it's interesting, again, looking at the shape of the long-term cycle doesn't look all that interesting. It sort of, if you just wanted to step back first on that, David, and what it sort of suggests to me is that the euro in the long run is gonna have trouble, and that comes with the that a very left translated cycle. It will for the larger 14-year or whatever that we're looking at. So it's the European markets and then the euro. It's not we're going to find a low and we will rally, no doubt, and we will go up for a while. But I'm just saying, in the very long term, it's not a very interesting cycle.
Can I just take a moment to sort of highlight that point, because for some people who are new to Hurst cycles, the concept of a left translated cycle, what that means is that you can see I've drawn a sort of an M shape there for this really big cycle, this 14-year cycle here. Left translated means that the highest point of the cycle was over here, and it was in the first half. It was on the left side of the cycle. Now, when you see a cycle shape which is left translated, in other words, the peak, the highest point, is early in the cycle, then that indicates generally a very bearish shaped cycle. Okay, so when you get an early peak, then it means that generally the cycle is really going to end up with a very bearish shape, and so that's what John's speaking about there, with it being a left translated and therefore not very optimistic shaped cycle.
And so that, just as a sort of to frame the analysis, that means for me that in the long run you have to give the benefit to the U.S. dollar. I think, bounces and cycle lows aside, in the very long run, I think it's an important message for the U.S. dollar. But if we
the
look
U.S.
at
dollar has a lot of strength in it.
It does, and I think it's something that you can't underestimate. And I think it's important for the U.S. markets. But if we go back to the phasing, just the short-term phasing on this instrument, to me, it is going to try to make a low. The 7-year FLD has been broken on this instrument, and it's telling you that a cycle low is in the process of forming, and it could be something that happens imminently, or it could take a number of weeks still. You see how
but you're speaking number of weeks for a. Yeah, sorry, let me put that back up again. There's the 7-year FLD. And price has just recently dropped down below that 7-year FLD.
And the 7-year VTL as well has been broken. If I don't know if anyone noticed that, but the 7-year FLD also was broken. So both are confirming that low forming.
Right. I think the 7-year FLD was the VTL. There's the 7-year VTL on EWC. That's been broken.
I'm not sure why it's drawing in that way, but yeah, there you go.
Yeah.
Okay. So that's
okay. So
that's Sorry, David, go ahead.
So the important point is that these markets are coming down into a trough, which is expected soon. You were saying within a few weeks. So we're looking at we're really close to a very, very important trough in these markets, the Canadian market and the DAX. We're looking at a bounce which is going to be of a magnitude of many years, 7 years, 14 years, perhaps, occurring really quite soon.
So I think now what we wanted to do in terms of the progression is to talk about the Dow transports. And
right.
I think that was the next chart that we wanted to look at. And the reason is that I'm sure many of you are familiar with Dow theory. And I've been watching the Dow transports for quite a while. And they put in an important peak early last year, and it gave a non-confirmation to the Dow high that was made last year. And so the Dow theory is basically saying, okay, the bull market pretty much basically is ended, and a new bull market. Well, we're waiting to see, whether that gets confirmed, but we would need new highs in both indices to get that. Which is quite a ways from that. And then the other thing is that the Dow, even though the Dow transports have been making new lows, the Dow has yet to take out
Dow Industrial.
its important.
So let's kind of Dow Industrial, yes.
Yeah, it has yet to take out its important low from August, from August last year.
Yes.
And I would say chances are that's going to happen before we make an important low. Both will confirm a bear market, and then we find whatever low we're going to make. I'm not sure yet of the targets, but chances are that low is going to be tested and taken out. So we wanted to go back to the transports just to have a look at that. And it's interesting. I haven't run an analysis because I didn't have the data that David had, but you can see from the cycle and cycle shapes, it's been very bullish. And you can see how everything's pointing again to an important low to form this year. And it is, it's obviously, I think the transports in this case, in this market, is being driven very much by commodities, crude oil. They're having a very, very big impact on this index. So I'm thinking that you have to watch the transports again for a sign of a major low forming, because if you look past lows, the transports have to find a low and rally out of that along with the industrials to really give you a sort of indication that yes, an important low is forming, has formed, and that just hasn't happened yet. So I don't know if I'm looking at your analysis, David. I didn't really see where you've got to on that, but I think just looking at Sentient and what it has there, I think the August low was probably.
It's over there.
See again, Sentient's struggling to find where the.
It's struggling to identify those troughs on the way down.
Pretty much.
Yes.
Pretty much.
Yeah.
Right. So it's
the important thing again is that we are fairly close to forming that really important trough, in the transports.
Yes. And who knows? The point of this discussion is it could take all year to bang that bottom, to bang out a bottom. It's not that clear yet, is I guess the point. But these are the things that I'm watching, that we're all watching, and yes, someone's mentioning China, and obviously, I think that the Chinese market has been driving this as well. So that's that's another market to watch and to see where things sort of lead us. So from the transports, my thought is that we would go to crude oil because crude
Right.
oil
Let's take a look at crude oil.
that everyone watches. Uh, Crude oil is, I don't know if anyone knows this, but crude oil is I think it's the biggest futures traded market in the world and in the commodity space. And there's no doubt in my mind that the decline that started in 2014 is what's driving the TSX and is driving a lot of markets today. And so if we just do a broad view of the of crude, we had in 2008 we had a what I think was a commodity uh, secular top or super cycle top for crude, and that spike to 150 was what did it. And then from there we got a very very weak, say, rally relative to that, which basically formed a
Yeah.
bearish cycle. And then what happened, in my mind, the Fed, um, with all the credit creation, basically pumped a lot of credit into the system and helped crude make that rally and bearish rally. And to my mind, crude never should have got up to those levels, but it
Right.
did. And now now you're seeing sort of the downside of that entire cycle, and you can see where Sentient identifies the early 2014 low. That's a 6-year, in my work, that's a 6-year or 60 months or 66-month cycle low that failed because crude tried to rally out of that low, and then it just
Right.
started heading. It just started heading down, and so now, as we try to
Yeah.
sort out what crude is trying to do, in my analysis, if you want to sort of focus in from the 2014 low onward.
Right. There we go.
And I think too, just as sort of a point of caution, analyzing crude is very, very difficult here because it's been such a strong bearish market. But the cycles that I've worked with and I've looked at and have been working quite well up until now have been the ones that are shown on the right side. That's a 45-week, a 22-month cycle, a 60 to
22
66
months.
month cycle, and then something that's a little over 10 years. And now what you see is that these cycles are expanding in time. And the first cycle low, which was the for the 45-week off of the 2014 low, it went well beyond 45 weeks. And you could argue that perhaps that low was the January low last year, or it went into March. Really hard to say.
Yeah.
But now it's quite clear to me that it's now heading down into a 20 to 22-month cycle low, which is actually at 24 months, and it's pending. It's right in front of us. So if you want to
Right.
maybe spin on that, David,
Yeah.
and the point of looking at crude is crude broke down from a triangle that formed all of last year. I don't know if people can see that,
Yeah.
but when you bring it up,
Yeah. Let's go back to that.
if you see that, if you connect the highs and lows, there's a nice triangle, and it broke down out of that in early January. And when it did that, it really, I think, is what's panicked the market a bit here. And so now I think what you're seeing is you're seeing a strong move in crude, and it's going to try to finish and find an important low. Um, and
Right.
we had a little bounce in crude last week as it touched 27 or 27 and change level. But the problem is that fundamentally, crude oil has some tremendous issues in global markets, and in particular, it's really important for Canada.
Right.
I think, in my mind, we have to follow crude oil and from this point on, at least for the markets this year, and get a sense of what it's doing before we can really decide that the markets are making an important low. In other words,
Yeah.
if crude oil does make this 22-month low, then you're going to see a very strong bounce in the markets. The markets are going to be up, and I think the real selling will be over. And so that's why I think that you can't get too bearish once that point in time arrives. And so
Right.
what do we think, in terms of the phasing? I think the phasing is pretty good on crude here. If we zoom in a little bit further on the daily, David, say this 40, this
On
say
that,
from August on,
from August. Yeah, there we go.
and then
I
maybe
see.
we throw
I
open
see a question from
FLD.
Sid. I want to jump in. I see a question from Sid that the 18-month trough is overdue because, of course, this circle over here represents the exact time that trough would have been expected because of the recent wavelengths, the actual wavelengths of the recent iterations of that cycle. And so it is overdue. As John mentioned, we're running at about 24 months now. The average is 22. And so we're 2 months overdue already with that cycle. Sid says, is it possible that it could have already occurred? Of course, if that has already occurred, then we're seeing an extremely bearish picture, aren't we, John? Because let's just devil's advocate and say, if this 18 or 22-month low actually occurred over here, then it gave us a bounce of very small magnitude, and then if the
Yeah,
markets turn down again. So if it has already, then that would be an extremely bearish
I agree.
possibility. So bearish that it seems really unlikely, in my opinion. I don't know whether you'd agree with that. It's more likely that the cycle is actually running long, isn't that correct?
Yes.
And
So
therefore
let me let
expect a
me uh, let
bounce.
me let me back up and explain a little bit my view on oil. And to me, oil trades on longer cycle periods than stocks. It's a completely different market, and the cycles are completely different. I don't think you can use the nominal Hurst cycles to analyze oil. And so I have a model, and that model is much different from the cycles that you see listed on the right side of the chart. And I used
Yeah.
basically those cycle periods, put them in, and used that for Sentient's default model. And I have a lot of confidence in that, and it has worked for me quite well. So if that's true, and if these cycle periods are working, um, I'm looking at crude, and my view is that between now and the coming weeks, it could be next week, it could be to the spring, but crude is working on a major low. And why don't we throw up an FLD, like the 20-day, in crude's case, it's the 20, say 24-day FLD.
Yeah.
And if we were to see, that taken out to the upside, I think that's your first signal, potential signal for a buy and a bottom. So yes, and I agree that oil fundamentals are terrible. Okay, I mean, I'll be the first to make that argument, and that's why you're seeing oil looking so so bearish. But at some point, it's going to
Right.
find a floor, and once it finds the floor, then I think the panic in the market sort of subsides. There will be issues, financial issues with oil trading at these levels, and I think that's what's going to sort of keep the market down this year. But I think you've got to watch oil here and make sure that you're not too bearish once it makes its low. So you can see that oil just bounced here. This data is up until I think Thursday or Friday, and oil bounced into the 20-day FLD here at roughly 32. I'm not sure where
Right.
it's trading today, but it wouldn't surprise me that that it's backing off here a bit. Right.
I think it
So
is. Yeah. Yeah.
yeah. So to me, you can get bounces, but
31, Nicholas says.
I
Okay.
yeah, I think that you're looking at a picture here where the phasing says it's still ahead of us, and I think
Right.
if oil is not able to trade over 30 next month, then I think it continues down. Perhaps one thing we should look at, David,
Okay.
is the peak analysis. There's a peak analysis that goes with this for oil that also really works quite
Yeah.
well.
Okay. Here we go. And let me just clean this chart up a little. While I'm loading this chart, I see Nicholas says he doesn't have much experience in Saudi. You account for the deliberate oversupply from Saudi, which is depressing crude. So that's a fascinating question, and it has to do with the interplay between cycles and technical analysis and fundamental analysis. What's happening in the world, and manipulation of markets and all that thing. It's too big a subject for us to begin to try to tackle in today's webinar, but perhaps the sort of easiest way of my expressing what I think is generally a Hurst analyst's opinion is that the cycles influence the markets, and that manipulation of markets or deliberate oversupply by Saudi, for instance, um, uh, um, obviously affect the markets, but the markets are affected in a way which is dictated to by the cycles. I don't know if that sounds like I'm speaking in circles, but it is a little bit like that. Cycles move markets. Sometimes cycles get a bit squashed or squeezed or covered up by manipulation. But generally the cycles will tell, and they do show, and the way in which markets work generally, the cycles end up showing, despite any mental interaction, or perhaps because of it. Perhaps some cycle analysts I know would say that the deliberate oversupply from Saudi is itself a cyclical thing. That it has to do with the cycles of economies and cycles of politics and so on. I hope that maybe sort of begins to give you something to think about in terms of that question. Sorry, here we are, John.
Yeah.
This is
So what I wanted to
the
first
peak
point out, David,
analysis.
is if people look at the cycles at the top right of the chart. So yeah,
Right, let me
let's start with that.
zoom in.
No, you can keep it there for a minute. So you can talk about the long view, and the long view is that you get these nice long cycles, 10, 11 years. I think is a very prominent, very dominant for crude, and so now if we look at okay, where are we now? We've got if you look at the right, you see the cycles that are listed there. You have an 11-year, you've got something that's around 69 months, 21 months, 43 weeks, 24 weeks. Again, those are cycles that I see in the trough analysis as well. So Centene has found them from a peak side analysis, but something very similar works on a trough analysis as well.
Right.
And if we if we look at the if you want to just back it out and look at the prominence and the importance of that the 2014 peak, you'll see that it paints a bit of a bearish picture. So if you just want to get the bubbles on that, there you go.
Right.
So now you
Yeah.
can see how important the peak that was. and in off of the 2008 peak,
2014.
yeah, off the 2008 peak, we came right back up. Ultimately, crude is going to find a low, and then we'll head back up into call it a 60-month or 5 or 6 year cycle high that'd be due 2 to 3 years down the road. I don't know if you can
Right.
imagine that. So the point is that crude really should find a floor here, and it'll bounce and it'll go up some magnitude, some degree. But I don't think it'll be that bullish because it would still have to find long-term lows from the trough analysis, if you know what I'm saying. So, maybe over the next 2 or 3 years, once crude finds a low this year, it would find a way to get up to maybe 60, 65, maybe 80, and then it would probably come back down.
Right. So we're looking at this sort of range here. Yes.
Yeah.
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 And so can I just sort of quickly mention the interesting difference between a commodity and a stock. Stock markets generally have sharp isolated troughs, and they have rounded curved peaks. If we go to any one of the stocks that we've been looking at, peaks generally tend to be fairly rounded affairs. Here's the S&P 500. Peaks in a stock market tend to be fairly rounded and clustered, so you get lots of peaks all happening at the same time, whereas troughs tend to be very sharp and isolated. That's the nature of stock markets and the way in which cycles combine in stock markets. Generally, commodities, of course, do the reverse. And so if we go back to oil, generally, commodities form very sharp isolates, and in fact, sorry, let me just zoom out on this, and I can show you. They'll form very sharp isolated. That didn't work. Zoom out. There we go. Form very sharp isolated peaks, and then rounded and sort of clustered troughs. But crude oil is an interesting commodity because it seems to sort of bridge between stocks and commodities. If you look at coffee, for instance, you see very clear peaks and very rounded troughs. Crude oil, you tend to get both things happening. Here you get a sharp isolated peak, but then also a sharp isolated trough, and then then you're getting a sort of a rounded peak over there. So crude oil seems to it's a bit of a shapeshifter, in my opinion. It seems to change sometimes from being a trough-based analysis to being a peak-based analysis again. So it's quite interesting to look at for these analyses, both the trough and the peak. And perhaps ask ourselves what kind of a trough is going to form here. Are we expecting a sharp isolated trough with a big bounce, or you seem to be saying that we're expecting more of a complicated sort of retesting of the level, more of a rounded trough forming here?
Yeah, I think it'll be a complex bottom, and so now if we look at the phasing. And again, this is not something that's easily predicted, but we have this 22-month cycle that's long and pending. And if we look at the peaks analysis, if we look at the peaks analysis, well, we see that there's a 45-week on the peak that is due this spring. So my thought is probably crude oil is going to find a low imminently, and it's going to bounce. Now that could be your larger cycle low from a trough analysis, and it gives you a bounce, and then we go down again and we retest that low later this year. And so to me, you'd have to sort of have to read into that and think, well, probably that's important for the markets. That's probably going to be important for the Canadian market and the U.S. markets, particularly if we don't hit some targets that we expect. And I think that's sort of what's going to happen this year is that we're going to form a low here in the coming weeks. It could be this week. It could have happened last week. But we're going to find a low. We're going to bounce. And crude will be a signal for that. And
Right.
and then you can't be too bearish is the point. And then you'd look
You
probably
can't
for
be
some
too
long
bearish
trades.
because crude is a you can't be too bearish because crude has a big turn that is overdue, and it needs to do a bit of a bounce fairly soon. So for that reason, you're saying
Yes,
you shouldn't be too bearish on the stock markets extending their falls, because we should be getting some action in crude, some bullish action.
exactly. So looking at the phasing, it's just not very clear to say, oh, it'll happen this week, or it'll happen perhaps in February. Certainly, from a seasonal point of view, it's the right time for crude
Right.
to find a low. And I mean, trust me, a lot of people are watching this market, as the issue for the world markets, and for markets like the TSX is, the entire energy space in Canada is insolvent at $30 crude. And
Right.
so this hasn't been priced in yet. And a lot of people have been expecting crude to make a low and then bounce, much like 2008. Well, that's just not going to happen. It's not likely to happen based on the long-term cycles and based on what we're seeing here in this analysis. That crude is probably stuck in a range now. And so
Okay.
what's important for the markets is you're going to see, I think, a lot of financial issues sort of propagate through through the markets here, and be an issue, because you've seen it in the financials lately. They finally started to correct. So again,
Right.
crude is important for that reason. And once we find a low, if crude were to spike down and find a low in the 20s, then and then reverse, that to me would be a sign that, yeah, you're seeing a swing low in the markets here, and now we're up for a little while. We're going to bounce for several weeks, maybe 2 to 3 months.
Right.
All
Right.
right.
So the market definitely to be watching is crude oil finding its 22-month trough, which is now overdue.
Yes.
So
Yes.
we need to keep our eyes on it. And you're saying, in particular, watch this FLD, with the 20-day FLD here, and we need price to get above it and stay above it, which is pretty much the $30 level. We need it to get above the $30 level and stay above it in a sort
Yeah.
of a confident manner,
And I
and
think
before we can even
until
start thinking.
exactly, and until crude does that, I would say the markets may just bang around, in a range. If you understand me, I don't see there's going to be a lot of upside, or quite a bit beyond what we've already seen, until you get a confirmation from crude.
Right, right,
So
right.
so
So
that would,
crude
I
provides a
think,
key.
would bring us. I think that would bring us then to the next chart, which is that of the Canadian dollar.
Right,
Um,
Canadian dollar. Okay, oh, I've
and
left that composite line on. Let me turn that off for me. Yeah.
yeah, I was going to say I
So
put that off for now. Yeah. Okay.
yeah,
So if we I don't know if you can zoom out, David.
yes. Sorry, let me do that. Yeah, there we go.
'Cause there's
So
an
here's the
interesting
Canadian dollar
facet to.
against the
Yeah.
US dollar.
Yeah. So this kind of reminds me of the euro and some of the markets that we've been looking at. You see this left translated peak that kind of gives me pause,
Yes,
in the Canadian dollar, and that
yes.
that was the that was the spike in 2007. Um, and so what it did was it left a left translated cycle for this 16-year cycle that you see in the Canadian dollar. Now I see that Sentient's got a shorter cycle period showing. I haven't put a model into this. I've just run it with the initial cyclic model setting on Sentient, and just let it run its spectral analysis. But pretty sure that the
Okay.
Canadian dollar works very well on an 8-year cycle, a 4 and an 8-year cycle.
A 4 and
Um,
an 8 year. So let me just jump in and explain to those, particularly those who aren't Sentient Trader users. Sentient Trader works with a cycle model called the nominal model, which is simply a list of cycles that it uses, that it tries to find in the markets. And what you can do is, instead of basing the analysis very strictly on that nominal model, you can have Sentient Trader perform a form of spectral analysis, and it finds the cycles that are present in the market, and that's called an initial cyclic model process. And you'll end up with slightly different length cycles, and that's what John's done in this analysis. And so when we zoom in, you'll probably be able to see the wavelengths of these cycles. That looks like a 6.9 year cycle. The nominal model, strictly speaking, would have looked for a 9-year cycle, and so Sentient Trader has found a shorter cycle of 9 years because of using the initial cyclic model. Just to clarify that.
and something
Sorry, John, I
something I
jumped in
wanted
there.
to Sorry, something I wanted to point out is if you look at the lows that were formed by the Canadian dollar in 2001, 2002, and you picture in your mind what the S&P was doing at the time and what the TSX was doing at the time, that the first main low came right at the how should I say, it came right at the turn into 2002, and that was sort of in
Yeah.
the midst of a bear market.
Right.
But it was an blow, and the same thing happened in 2009. The Canadian dollar finds a very important low right in the midst of a very big
Yes.
bear market.
Of a
And
very
what is
big
it
bear.
doing
Yeah.
now? What is it doing now? It's doing exactly the same thing. Now, the issue
Right.
for the Canadian dollar is the shape of the cycle. It's problem because it's a bearish shape. And when you see shapes like that,
It's a bearish shape
you kind of have to be yeah, you kind of have to be
because of this
careful
early
stepping in
peak.
front of it. Yeah, yeah. So there's nothing
Yeah.
stopping the
So
Canadian dollar from testing lower levels here.
okay, so can I just clarify that for those who are fairly new to cycle analysis? When you're looking at a cycle that is playing out in the markets, you look at the shape of the cycle that is developing, and if a cycle has an early peak, and you probably know I like to draw M shapes. Not everybody draws M's there, but I draw M's, and if the first peak is higher than the second peak, this one over here, which it is in this case, then that indicates that a bearish cycle is playing out. And what we're seeing at the moment is the move down into the end of this cycle. And if it's a bearish cycle that is playing out, we expect um, we'd expect the end of the cycle to be lower than the beginning of the cycle, which means it's still got a way to go to come down. And that's what John's saying in terms of the shape of the cycle is a bit worrying, because it is a bearish shaped cycle.
Yeah, so I think just addressing Thomas's question here, and just making a comment here that when you are looking at analyzing different markets, you can't assume that Hurst nominal model will work and be ideal for each market. You have to establish what the actual cycles really are, current cycles are. And in the case of currencies, in the case of this pair, the U.S. dollar pair or the Canadian dollar U.S. pair, a 4-year and an 8-year cycle are prominent, as is a 16-year. If you look at a very long-term chart of this pair, you'd be amazed to see how the 16-year cycle works from peak to peak, trough to trough. It is it's actually quite stunning.
Wow.
And yes, David, it is related to gold in a way too. I'm not sure we're going to have time to look at gold, but let's kind of try to press on and just look at the short-term picture for the Canadian dollar, because again, I think that'll help us understand what might be happening this year. So if you just want to zoom in from the last, I would say the last 14-month or rather 18-month cycle low for the Canadian, that's it. Yeah.
Yeah, there we go.
So yeah,
Okay.
I think this phasing is fairly solid off of the February low. I think in last year, I think that's a good 14-month cycle. I'm not sure about the cycle periods though, and I think that the actual cycle periods probably run closer to 16 months, and 4 years and 8 years for this pair. And if so, if we were to take that, then 18 months. Where does 18 months get you? Well, you'd have to go out to later this year to get to get that to
Yeah, there we
work.
go.
So you follow
18
me?
months,
So
you're looking there, August. Yeah. Yeah.
yeah, August or later in the year, certainly. Maybe it happens by the spring, even. I would say, sorry, 16 months. I meant, David. So it
16
could be
months, there
by
we go.
yeah, it
Yeah.
could be by the spring, and so that suggests to me that the September the September low of last year was probably the half cycle, which would have which would be 8-month cycle low, and what's ahead is another another bearish, if you will, 8-month cycle that's to conclude here in the spring. The FLDs are
Right.
the phasing is sort of suggesting that you can see that,
Yes.
and so again, for the same reason as crude, I think the Canadian dollar is a really important instrument to watch and to assess in terms of markets. And I really don't see a bullish market until the Canadian dollar makes it slow. And I don't know if you want to show the composite
Yeah.
now, but you can see
Yes, let me do.
that sentient, yeah, you can see that sentient is struggling, um, to find a bullish outlook for the Canadian dollar here.
Yes, that's right.
In
Yes, look at that.
in the near
So,
term.
can I just jump in and explain
Yeah.
for those who are new to the commonality, not commonality, the composite model line? What Sentient Trader does is it takes the results of the analysis and it puts it back together again and creates a line. So, in other words, when it comes to the analysis, it knows what the wavelength is of each cycle, it knows what the amplitude is of each cycle, and it calculates that from the analysis. And then it puts that information back, combines it into this line, which you see here, which we call the composite model line. And there are many things to say about the composite model line. It's not strictly speaking a forecast line. All it is doing is it is putting the information back and saying if all you knew about this market was this cyclic analysis, then that line is what you would have expected to happen. But what's really interesting is in which the composite model line is just plunging down to about the 50-cent level over here for this big trough. And so so the actual cycle information that we have is really painting a very bearish picture
So that's the
for what's
point.
happening.
Is Yeah, that's the point. Is I can't predict right now where we're going to find a low this year, but you can see how everything is painting a picture that yeah, we're going to make an important low. The problem I see is crude oil, the Canadian dollar, and the TSX. They have not hit their targets. And the target I
Right.
have for the TSX is around 11,000 or below 11,000, and then
11,000.
for crude, yeah, we hit 11.5 last week. For crude,
Let's just go
I
back.
don't know what to think, but but for crude, I don't know what to think. But here we are at around $30, and I'm not sure where the low is going to end up. And then you look at the Canadian dollar, again, same thing. You know that it's approaching some kind of a low this year. It's just hard to read. So yeah, so there's the TSX. And you can see how important crude
Yeah.
is. And you can see how how the Canadian dollar is having quite a problem. So
Yes.
where's a low going to form? Again, it could be weeks before we get more volatility, and it could be weeks before we finally start to see a proper low form. I don't think it's going to be a spike low. I think it's a low that forms and gets retested. So it's
Right.
not, if you know what I'm saying, it's not something that I don't know what your thought is, David, but when you're making such a large cycle low, it doesn't happen quickly.
No.
Um,
No,
it's a
that's right.
process.
Yeah.
Um,
Particularly, what's been particularly interesting about today is we've been looking at markets that are strongly influenced by crude oil, and as a commodity, generally we expect fairly complex bottoms, and so we're expecting one soon. It is likely to be a fairly complex bottom, and possibly the TSX is going to form, what is going to be a 7 or a 14-year low, while the US markets are forming a slightly less important low, perhaps. Perhaps that'll time in with a 40-week low, and then 40 weeks later we'll be testing those lows again, which might turn out to be the big lows for the US markets,
yeah.
possibly.
Can just for curiosity, can you go back to the crude chart and look at the composite on it? Because I'm sure it's not going to look that big either. But
Yes,
I think the
where's
point
the
is
crude?
I think what everyone should recognize is that you can't take the composite model as cast in stone. It's just telling you
Absolutely, yeah.
that it's just telling you an important low is coming, it's forming, and one, to be careful, to look for the opportunity. Okay. Now, again, I mean, you know, that composite model, like I'm kind of not sure about that. Okay. Uh, but the point is you can see that a low is forming and the importance of that low, and I think it drives everything from here. Now, and I would again not say that that is a projection. I think what it's projecting is new lows. Okay. Um, and
Yes,
if you look at the previous composite model spike downs, you can see how all the lows were higher lows than what was projected, right? Like that's what you got to look at. You got to look at
that's right.
the
But
'09
yes,
low,
exactly.
the low, correct?
Yeah, yeah,
And
and I see Nicholas saying that it has a spike bottom. The important thing to bear in mind with this composite model line is it's based entirely on trough analysis. So the only information it has to do with these troughs down here. And
yeah,
when you build a composite model line on only analysis, you will get a spike bottom just by the nature of the mathematics. Those
right.
cycles are expected to occur, the cycle troughs are expected to occur at the same time. So the mathematics of it will give you these spike bottoms. If we
Yeah.
combined this with the peak analysis, which you can do in the new version of Sentient Trader, then you might find less spike bottoms and some spike peaks. But it's
So
just an important
so
point to make.
there's a suggestion to zoom in on it, David, and I think that probably would be useful
Yeah,
because you
yeah,
get a sense of
absolutely.
what the timing, of a low might be.
Okay. Yeah,
So
yeah,
let me say this: if the markets here were to get into a bit of a panic, and you were to see crude spike down, and I don't know, it might go to 25 level, $25 level, or the $20 level, or what. But if you were to see that in the near future, I think that is going to be a sort of a moment of capitulation for the market. I think that is going to be the kind of panic that gives you a fairly important low. And so the point is that what crude does will be the driver for markets overall. It'll be the driver for the market that I watch here in Canada, the TSX. It'll be really important for U.S. markets. It'll be important for markets worldwide. And again, based on the the principle of commonality. And I don't know if you want to maybe finish off with that, Dave, because that's, I think, the whole theme of today's talk is that we're looking at all these markets to try and understand, where things are driving, where things are going, and then as we work through it, we should get a sense of what it means for all markets in general.
Right. Yes. Yes. So, so we're saying we're definitely expecting a low, a fairly important low in crude oil, which might be a complex low, and the bounce up might not be as impressive as one might expect because of the fact that it's a fairly complex low. So it's not going to be, it's probably not going to be a spike, but we're looking for that turn in oil to inform us about the stock markets generally. And so we are looking at a bounce happening fairly soon, something to stand by for. But as I think Sid mentioned, you shouldn't probably be going long yet. As cycle analysts, we know how important time is, and you have to be careful that you don't do things prematurely. Markets can come down really, really hard and fast into these really important flows. So we'd be looking for evidence that the trough has formed really before we start building any long positions here. And perhaps using the FLD, as John mentioned. Is that the chart I've got here? Here we go. Perhaps using this FLD, the 20-day FLD. We'd need price to get above that 20-day FLD and stay above it as any kind of evidence that the market is beginning to turn.
So maybe a comment to add is that the coming weeks are really important for oil, for the Canadian dollar, and I see there are a lot of questions about gold. And we didn't prepare an analysis for gold today, but I can tell you that the gold mining companies are not. Yeah, the gold mining companies are not acting that well right now. One of the indices made a new low, which is the XAU, and so it sort of tells me that gold is not really ready to go yet, and as far as any kind of a larger cycle degree rally. But it's pending. It could happen at any time. And I think if you watch crude oil, if you watch the Canadian dollar, all these things have got to be making lows before you can really say that a gold low has formed and that we should rally for a while. So I've been waiting, just trading, but been waiting on this, and I think the Canadian dollar is going to give you a good read on it, because if you look at historical charts, the Canadian dollar typically finds a bottom with gold, and then you're into an upcycle that lasts for quite some time. How bullish that becomes, I have no idea, but that's the way I look at it. So how long is it going to take for that to happen? Well, the Canadian dollar, the problem with the chart of the Canadian dollar is it's not particularly bullish. It's got that left translated high, and so gold may rally. It may be in a range for a while until that proper low is established. That's the problem I see for gold.
Right. Here I have a.
So there is. Yeah, go ahead, David.
Updated. Yes. Here's just an update on. As John mentioned, we haven't really prepared gold. We weren't planning to speak about gold, but here's one of the analyses. Perhaps I shouldn't even start getting into it, but it does look as if though it's still expecting another bounce before a major trough is happening. In our last webinar, which we discussed gold.
Yeah.
Yes. Go ahead.
I was going to say, in some other things I look at, I see the potential for an April timeframe kind of low, and that would go well with the Canadian dollar in the near term, and the way perhaps crude is going to trade.
Right. Yes, yes. And I see David says penultimate 20-week low made in gold early December. So that's this analysis that we're seeing here. There's the 20-week cycle trough
Yes.
in December 2015. So you're looking at the big 18-month cycle trough occurring March, April, as just mentioned. So that's really the you're looking at happening in gold. Gold, of course, I believe I might be alone in this, but I believe gold generally forms very sharp peaks, and it tends to form rounded troughs. So any troughing process in gold is likely to be, a constant retesting of those levels, and we generally end up with fairly rounded troughs. Um,
Yeah.
the great thing about that, of course, is that if you miss the actual trough, then one cycle later, 20 weeks later, or 80 days later, or 40 days later, you can probably get in at almost as good a price.
Can you
On the
zoom out
as it turns around.
on that?
Yeah,
Do you just mind if we finish off by zooming out on that? Because
not at all. I'm not even sure where this chart comes from, John. It
I
might
was going to
be
say
one of
I don't
yours,
remember
or
seeing that.
I think maybe it's an analysis I was playing with. I'm not sure it's sort of been very carefully considered. I think I was just playing around with it. And in fact, the nominal model on this one is not the nominal model we spoke about in our last webinar. So
Right.
perhaps I'm showing the
Right.
wrong
It's
chart.
not.
I
That's
don't want
not to
to
say
cause
it's not
confusion.
correct. Yeah, that's not to say it's not correct.
Yeah.
But
Let's just see. No, I think I'm going to confuse everybody. So let's just stick with this for now. But the important point is probably that March, April is where we're expecting the next sort of trough worth trading to
I think that's the next
happen in
tradable low.
gold.
Correct.
Yeah,
Correct.
yeah. Okay. Let's see if there are any questions or things we've missed there. I see lots of mentions of gold, and as I said, says virtually every item shown is projecting a significant low between approximately March and June, with some even slightly earlier. I think so, perhaps next few weeks. Um, so. And Anton asks, "What about silver?" I regret I don't have a silver chart loaded up. What about euro US dollar? Again, we didn't really plan to look at euro US dollar, so I'm not sure what analyses I have here. But here is an analysis of the euro to US dollar, just very quickly. There we go. This analysis still has the 54-month cycle trough in March of 2015, which I believe is still the case. So that was a very important trough, and that we saw in December is therefore the 40-week cycle trough. And just a very quick sort of summary of this analysis, coming in slightly early at 38 weeks. What's been quite interesting about the euro is that it has really sort of failed since then, hasn't it? Let me clear that. It bounced up very nicely in one day in December because of Mario Draghi doing something, the European Central Bank, and since then it has really failed to get anywhere. What does that mean? Very sort of just giving it a very quick overview. The first trough, the first 40-week cycle that we saw since March of 2015 is a slightly bullish cycle, but only very slightly, because you see we have the peak, the highest price, on the right-hand side of the cycle, and it ended up in December just a few cents above the low in March. So it's a very slightly bullish 40-week cycle. Most people would think that's being generous. It's really a fairly neutrally shaped cycle. So it doesn't really look as if the market's going anywhere. But what has happened since December, if I zoom in here, is quite interesting. The cycles that we've seen playing out have definitely started turning bearish, which we wouldn't expect. So here's the M shape. I love drawing these M shapes, as you know, but that is what we've seen several times today, a left translated cycle. In other words, the peak, the highest price in the cycle, happened early in the cycle. That means that we are currently witnessing a bearish, a fairly bearishly shaped 80-day cycle, indicating that there has been a bit of a shift to the bear in the euro US dollar. If you're new to Hurst cycles, you might be asking yourself how it's possible that a 54-month cycle trough formed in March of last year, and yet I'm speaking about bearish cycles. Surely after a 54-month cycle trough, the markets should bounce up for, for 2 or 3 years. But of course, things don't work like that. It is quite possible that this bounce out of the 54-month cycle trough turns out to be a very disappointing bounce, and it's quite possible that the markets are turning, or the euro is turning bearish again. If that is the case, then that's that means really bad euro. But we haven't really prepared any discussion about the euro, so I'm just going to leave it at a very quick little overview, just to mention that the euro definitely does seem to be turning a little bearish.
So that's
cycle shapes.
I was going to say that adds more ammunition to the argument that the U.S. dollar in the grander scheme is quite strong. Yeah.
The US dollar is strong, absolutely in so many of those charts today. The strength of the euro of the US dollar is something to be contended with and considered. The US dollar has been very, very strong. I see a question from Sergey. If you are projecting S&P plunge in the spring, would you please put some light to US dollar Japanese yen? Yes, so the US dollar Japanese yen is something we must look at. I don't have a chart of the US dollar Japanese yen, but I'll tell you what I will do for our next webinar. I'm going to gather some of these charts, and we can take a look at a bigger range of markets. Perhaps take a look at silver, US dollar Japanese yen. Take a few notes. FXY. I'm afraid I don't have any charts for FXY loaded. Let's see, Najmudin, I hope I pronounced that correctly. If the 54-month cycle has low amplitude, does that mean the principle of proportionality may not hold true in this case? That's a very interesting question. The principle of proportionality, for those of you who don't know, is states that basically the different aspects of a cycle are proportional to one another. So the longer the wavelength, the greater the magnitude, the amplitude, I beg your pardon. So if you get a longer wavelength cycle, you tend to get a greater amplitude cycle, and the shorter the wavelength, the lower the amplitude, the less powerful that cycle is. So the longer cycles are more powerful. The principle of proportionality is an interesting one. In my opinion, it tends to be the principle of all of Hurst's principles. It's the principle that doesn't really work out all the time, in my opinion. Very often you will see really long cycles that have very low amplitude, and so there's something else at work there, Najmudin, in my opinion, and certainly the concept that a 54-month cycle is 3 times the amplitude of an 18-month cycle is definitely not true generally. In fact, you get more accurate cycle shapes if you produce diagrams using a lower ratio, so it's not directly proportional. So I don't think it negates the principle of proportionality. There is definitely some proportionality between wavelength and amplitude, but it tends to be the less consistent principle, in my opinion. Okay. I see it's we've been going for over an hour and a half, so it is time for us to wrap up here. Thank you very, very much, John, for joining me and for sharing your analysis. It's been very insightful as always. So Thank you very much for your time, John. And
Yep,
to everybody
been
else,
a real
thank you
pleasure.
very much for joining us. Thank you. And everybody else, thank you very much for joining us. Thank you for here. Thank you for your interest in Hurst cycles. Our next webinar is going to be in 2 weeks' time. I'm going to be holding these webinars every 2 weeks. Other demands on my time have made the weekly webinar impractical. So we'll be back again in 2 weeks' time, and I look forward to seeing you there. Please do email me with any questions or comments or anything in particular that you would like to see discussed in these get-togethers of ours, in these webinars, and I look forward to hearing your thoughts. So thank you very much for joining us, and I look forward to seeing you next time.
Mm.